All right, welcome to tonight's session of Bridging the Gap, SMC to Orderflow. I want to go over just essentially some live tape reading. I've been running super late all week, just juggling life. I've got a couple children and a wife, so I am busy. I wasn't able to prepare any slides or anything like that, but sometimes I feel as though the best way to digest what I'm discussing here is going to be through just live tape reading. So tonight we are going to just be monitoring and decoding essentially the Asian session market. So it is right now 8:05 p.m. Asian session begins at 8, and we might even potentially take some trades depending on how this pans out. So I generally will wait at least 15 minutes prior prior to taking any trades and any sessions open. I do want to explain some of the stuff that I have laid out on my chart that might appear a little bit confusing to anyone who trades SMC or ICT concepts. You'll be familiar with, sell side liquidity, 15-minute intervals, buy side liquidity, things of that nature, fair value gaps, yada yada. So the only stuff that you wouldn't be familiar with is down here. I have got a histogram chart that also provides indicators for CVD divergences. I do use aggressor bubbles similar to the ones that you would see on Bookmap. I've had other people make fun of me for performing order flow trading on TradingView instead of using Bookmap. Rhythmic is fantastic. Of course, you have a little less latency. I do recommend using Rhythmic. I personally don't. I'm okay with just using Tradeovate. I'm content with it. I'm not sweating the. I think it's about 1.3 seconds in latency. Usually my trades are longer of duration than that. So if I get into a trade a second later than someone else because I noticed my confluence is appearing and I'm in a touch later than the Bookmap trader, that's okay. I'm content with that. I like TradingView. So let's go ahead and start a top-down analysis. I will remove some of this stuff from my charts to keep it a little simplified here. All right, and for right now, well, those boxes will still be there if I... that's all right. I'm gonna. So go ahead and delete these for the time being, right? And we're going to start with a simple SMC concept analysis, top down. I generally like to begin on even the daily chart, although we know today we created all new time highs again. Woohoo, everybody loves that. That is always fantastic. So let's just clear all that stuff off. This orange line here is the volume weighted average price. I do use that within my trading every day. That's the only line indicator that I personally keep on my charts. I don't rely on EMAs or SMA lines or anything of that nature. I feel like that's just going to confuse you in the long run, right? So we are incredibly bullish, right? Everybody knows that. No surprise here. We are looking at a mammoth bull trend. Great. So what are we hunting? Continuation longs. I mean, I wouldn't be opposed to shorts either, depending on order flow, although I really wouldn't be opposed to shorts either. We do have the volume weighted average price sitting down here right at this daily bullish fair value gap, but we already tapped into it and respected it and zoomed off from that point, right? So these are daily candlesticks. So I noticed, boom, super bullish, top down, all right? In one of my other videos, I discussed looking at things from a satellite to a microscope perspective, meaning start zoomed out on a higher time frame, form your analysis prior to engaging with any lower time frame charts, okay? So I like to go daily down to the 4-hour. All right. And here you will see directly under us, we've got a 4-hour bullish fair value gap. Also got 4-hour sell side liquidity resting here, which could be previous low of day also. What do we got? No, that's Tuesday's low. Won't clear that type of liquidity out at all in this session by any means. So we got Wednesday here. So yeah, no, who am I kidding? Previous low of day, obviously. It's Tuesday's low. Forgetting what day it is. So sell side liquidity, 4-hour. I like to do slash previous low of day. Have everything nicely marked out. Okay, we have no other fair value gaps to mitigate in this line on the 4-hour chart. Up here, we have all-time highs as well as previous high of day, even though it was technically today. This is a new session. So we're going to consider that previous high of day slash ATH, all-time highs. Moving down. We are currently disrespecting this 1-hour bullish fair value gap, although I would want to see this first presented fair value gap get respected, which we could tighten this down. But I'm okay with leaving it as a 4-hour instead of tightening it down. If we wanted to, we could make it the 1-hour. Moving on to 30-minute. Okay. Huge sell-off at Asia Open here. Now, I like to wait 15 minutes into session open and then add a volume profile to to my chart, to the session. I will show you exactly how we do that. So I'm going to turn on the session volume profile indicator that indicator that I use. In this right here, if you notice, this 4-hour bullish fair value gap. So this, I have my settings on this for time frames are from 17 to 17, obviously 24-hour time. Set to exchange, volume area, value area volume 70, and I like to extend the point of control to the right. So the point of control is this yellow line, meaning this is where the most shares were traded for this current asset. I'm going to also turn on these aggressor bubbles. I know it looks sometimes a little crazy, but if you peel back the onion, we're still looking at the exact same stuff, right? I'm using SMC concepts in my analysis, and you notice how beautifully that volume weighted average price lines up with equilibrium of this 4-hour bullish fair value gap. It's just another confirmation confluence to me. I like that. It also lines up with this point of control. I generally don't like to take trades immediately out of the point of control. Incredibly bearish candlestick. Holy crap, 150 point dump off as soon as the session opens. We might be looking at an open low, close high scenario where the overnight session is going to distribute just for New York tomorrow to flip, or basically Asian session bearish, London manipulation, the lows, reversal, and then New York continuation. So AMD, accumulation, manipulation, distribution. So we are noticing large aggressor bubbles. Boom, 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 boom. Tons of liquidity entering here. Looking at the depth of market, this is my live account. So a funded account, you won't have access to this much data. I believe you can pay for it, although I'm not sure because I have the premium premium subscription, as well as I pay for the CME live data, and I've never had as detailed of a depth of market as I do with my live account. Holy moly. Wow. Okay. That is one heck of a candlestick right there. That is a 180 point. So we definitely wouldn't be looking for longs in this session now, right? Because that's a little 178 points is this one candlestick on a 15-minute time frame. But I want to walk you through how I would set up my session volume profile. It will give me an overall analysis on whether we are primarily bearish or bullish. It's just the beginning of my session analysis. So zoom out. Zoom in, I'm sorry. Okay, so point of control. Most shares were traded up at this level right here. This is a pretty unique looking volume profile, I must say. Just incredibly bearish. You don't really run into this. That wasn't what I was anticipating to show you this evening. Let me pull up average session volume profiles. And so like this right here is a relatively balanced volume profile. We have a huge get my lower parts back down here. Okay, so inside of yesterday's trading day, we had a large low volume node right here, meaning a big cutout in the volume profile, a lack of trading, but we have massive movement. So a lot of displacement with a lack of volume. So these are key areas where you tend to see price return to prior to a move higher or a move lower. And this is price trying to rebalance itself within this range. There are also large, what a institutional trader might refer to as an area of demand if you were entertaining a long position, or if you were entertaining shorts from a premium. From a premium, a low volume node up here would be considered an area of distribution. So I generally like to find those low volume nodes paired up with a higher time frame confluence. This 4-hour bullish fair value gap that we have resting right inside of that low volume node. So we have on the 4-hour time frame retrace back up here. We might just be mitigating this gap prior to a bull run. Although it isn't looking very good. It looks like shorts would most likely be the play for this evening. Now, when you see, this is such not a good example. In most cases, like right here, okay? So Asian, London, New York. This is one trading day. Throughout this entire session, when you notice that that volume profile forms a really large P shape, like the letter P, that's indicating massively bullish price action, strong bullish momentum, okay? We have a lot of shares being traded. Majority of it's up at these higher prices, meaning people are comfortable purchasing this asset up at these higher prices. They held. We did gap down, although we just swept out the liquidity from these lows and then returned back to, we were a little sideways temporarily chopping around, but then we created new all-time highs yet again. Okay, so when you see the volume profile primarily in a P, like the letter shape, you know that session's volume is primarily bullish. You also want to see that match up with, you know, you might use green candles, purple candles, whatever you like. But I use blue in terms of bullish and black in terms of bearish. So I would see that I have a P shape, but I also have a lot of bullish activity, less bearish activity. It's pretty close, but the fact that the point of control is so high and price consolidated within this range, this is considered the value area low, value area high. This is the range we traded in throughout the rest of the session. But that tells you we are super bullish. Now, if you were to find a volume profile that is, we've been on a serious bull run. Okay, over here. And you have a volume profile that's in the shape of a lowercase b, the letter B. That is indicating to you with the value area high and the value area low at the lower portion of that session's volume profile. That is indicating to you that you have bearish price action, overall bearish order flow. And do you notice how much we respect the value area high and the value area low and the value area high? This is a way that you can also trade these ranges, right? So normal sideways conditions for an SMC trader, you're most likely sitting on your hands 90% of the time. Now there's more opportunity that unfolds to you, and it gets deeper and deeper and deeper. You can then, this is an OTE, optimal trade entry, fib retracement, but there is opening range breakout, fib levels. What do you have there? Pivot points. These are commonly used pivot points. I primarily target these first two and try not to get too ambitious with my plays, but you can see that's a lot of institutional traders rely on order flow, volume profiles, and pivot points. Not all, but the majority. These are three massive tools in all of their toolboxes. And at these levels are where they're entertaining opposing trend positions. Or could be on a low time frame trend too. It doesn't necessarily mean high time frame, but even in sideways conditions, you can be scalp trading within that range and give yourself good confluence to take entries. Wow, look at this, huh? Craziness. We've got a 250 point range in Asia. So you know what that tells me is that New York session is probably going to be on the slower pace tomorrow. Usually when we have this much of a range in the overnight session, New York tends to be a little slower. So we are now back to consolidating around the point of control. Down here, we have trap shorts, people that still felt comfortable shorting that position, entertaining an opportunity. They were probably seeking, London lows or New York lows from the previous session as a target. But we also have this large blue aggressor bubble in there. And on the CVD, we do have some bullish price action showing up. So CVD delta histogram chart, and this is just a CVD candlestick chart. I like to have them both. This one I view with my own eyes and look for divergences basically between price and that cumulative volume delta, meaning this candle measures the difference in shares in the auction, or the leftover shares in that auction. So say right here, this is where things can look like madness, but I personally, a lot of people do, I personally don't worry too much about these levels on the side. Of course, I want to see more. If I'm taking a trade for a long, I would like to see you know, heavier bullish levels along the side. But you notice I have my settings so that it makes it a little easier for me. Okay, so we have these little highlighted areas right here, and these are levels of imbalance, and these get extended out. And I have that through my settings do that for me automatically. All right, and that means at those specific tick levels, these are my settings, ticks per row, 1, profile, and then how to get that is highlighting stacked levels. I like 5. Some people are comfortable with 3. Okay, and then you can also highlight unfinished auctions, meaning price left the space prior to actually finishing the auction at that tick level. So right here, these are stacked levels of imbalance, meaning at this level, price level per tick, there was at least, you know, 3 times the amount of bullish shares being purchased for longs than there were shorts present in the auction. So each candle is an auction. It's a live auction, right? So in this one candlestick, we had 36,000 shares being sold. These are contracts, really. So futures contracts being taken. They're all essentially an IOU. But out of that 36,000 shares, there was 837 shares. There was a leftover of 837 shares. Basically, the 800 I'm explaining this horribly. If you had 1,000 people at an auction and you know there was 500 or 400 shorts, but there was 600 longs in that candlestick, you would have a delta of 200, meaning we absorbed the shorts and there were still 200 shares remaining. So in this one candlestick, the shorts got absorbed by the longs and market, either limit orders or market orders. There was 837 shares. Okay, and so that's what this is. And I primarily pay attention to the colors of these because that will tell you so much. You can also look for a delta divergence. So CVD divergence is measuring the cumulative volume delta on a histogram or on a candlestick chart. These are live auction candlesticks. They're actually measuring the auction. They aren't just, these are a lot more accurate than, you know, a MACD or anything of that nature. Zoomed out, this looks like total mumbo jumbo. But if you were to find let's see right here, we have a delta divergence. You want to see a bearish candle with a green delta, and that's an indicator as to where price is likely to head. Okay, so that's not enough by itself to take an entry just based off of that notion, although you want to pair that with confluences. So I like to see a delta divergence. For my executions, I like to see a delta divergence. So even before the session opened, right? This is the value area high being extended from this, meaning this is what's considered a premium price for this in this current leg of volume. So this is the value area high. Down here, we have the value area low, and that's inside of that bullish fair value gap. So that tells me if that's considered a discount inside of the bullish fair value gap, that is most likely going to be respected, which it was. We had large players step in. We mitigated the gap, swept liquidity, filled in a ton of bullish limit orders. We see trap shorts. So we have absorption, obvious absorption, meaning these orders were all getting absorbed. This was a bearish candle digging down, but because all of the orders were absorbed, we extended it in back to the point of control to balance the price range. with a green delta. So strong bullish price action, right? So you would want to see, what I like to see is a CVD divergence, meaning we have a, which we necessarily don't, right? You'd want to see on the CVD chart right here, if you look at the vertical line that is extending down from my cursor, that vertical line intersects a delta box color, a histogram candle, and just a regular CVD candle. So I would want to see this right here is a low, and I'm going to mark that with my cursor and then go down just so that I can clearly read down on my other two charts. And I'm looking at, okay, here's the low that we created on the CVD, and here's the low that we created on this CVD, the histogram. Over here, did the auction price reflects a lower low, right? So we would want to see that. Well, to take longs, we would want to see a higher low on the CVD. So, but in this case, we did create a lower low on in price and both on the CVD. When you're this zoomed out, you're not paying attention to any of this stuff. You can't accurately read the data. I'm not paying attention to any of that other stuff. You could easily just turn it off for clarity if you'd like. I have it set up so that I favorited the candles that I frequent. So that way they're just right here and I can quickly and at a fast pace alternate in between for whatever I'm doing. So we've got obvious absorption. Shorts are not being respected. The 4-hour gap has been mitigated. We are going to, but we are now rejecting the value area high. That, needless to say, that doesn't mean that we're not going to surf right back into a premium. But this is just to show you how a lot of institutional traders think. I am not one. I'm a professional retail trader. But look at how close we came to that pivot point too. That's not just coincidence, right? So we very well could break free from this range. We potentially could see, again, new all-time highs in the overnight session, which is the most likely thing. Or move a little sideways for the time being throughout Asia. I mean, that was an insane move already. Generally, when trading Asian session, I like to, right around 8:30, entertain entries. And if you go back in your charts to do a little bit of homework, take a look at, mark a vertical line at 8:30 p.m. and go into, the previous month of Asian session history time frame, mark 8:30, and you'll notice there's a ton of key reversals around that time. So we are also respecting a 5-minute bearish fair value gap here too. I'm most likely going to just sit this out based off of the fact that we seem to be accumulating right on the point of control. And if there's a place that you're going to get stopped out, that is the most common. Point of control is usually has tendency to do a lot of wicking and clearing out liquidity on both sides of the aisle while at the point of control and then expanding from the range. So I like to take extended trades back to the point of control or a pivot. A lot of times you will see at the value area low and the value area high, there's a ton of times that we just kind of play ping pong throughout the day, throughout these specific levels. And people don't necessarily understand that because they don't know how to read these or set up these charts within their session. But I like to look at a session volume profile and then a daily volume profile. So these are daily volume profiles. Each one of these is that SVP HD indicator by TradingView that I have set for a pretty much 24-hour time frame. Market open to market close, I think minus 30 minutes or 15 minutes, something along those lines. But that will give you ranges. And if you notice, you can treat these just like at each point of control, there is liquidity and limit orders resting, and there are areas of demand or distribution. There are areas where traders want to take entries, super common. So a lot of times when you see, I don't know when, but we are most likely coming right back to this level here. We have an unmitigated point of control. Zooming out on the chart. Oh, where'd it go? Maybe not. Did it already get mitigated? Is that just a system error? Okay. Well, we have multiple levels down here that have not been mitigated. Let's go to a 30-minute time frame. Look back in history. Right? You can tell a lot. These become liquidity levels for later. Also lined up here, we have 30-minute lows, stuff that we would mark in ICT teachings. SMC concepts, this is sell side liquidity right at this low. And we expand from this range. New session volume profile. We're consolidating pretty much throughout the next two sessions. And then expand, expand, expand. We retrace down to the volume weighted average price. Pumping. But when we distribute, what are the areas where price is going? Boom. This point of control that we left behind here. That's not a coincidence. Okay, that's price rebalancing itself and targeting liquidity in limit orders at those levels. Then where did price go from there? Rips back up, back to these unmitigated point of control areas up here. Tons of liquidity resting above here. And we're not taught wrong. We're just taught more of a nullified version when trading SMC concepts. So right here, at these levels where price is going, we would be targeting these highs through SMC concepts, or these highs. This would be one of those cases where you have your price almost comes a pip away from your TP and then bounce back out. But had you been targeting the point of control, the almost certain area to get hit, like right here, you would get filled. If you were targeting these lows, you just watch your trade go back away from you and you probably break even on it, and that stinks. Nobody likes that. Had you had your take profit set on that point of control, look at how quick of a move that is. Using order flow, you can take this trade. Granted, there is a 30-minute inversion here. If we went back to that specific time, I don't even know where we were on the chart, but I'm willing to bet there was a smaller inversion that you could have taken. But you can get so much more accurate and pinpoint within your trading when you incorporate order flow and volume profiles. You layer that like an onion onto your already existing SMC education, and your profitability will soar. It can get very confusing too at times. Don't get me wrong. Like today, super obvious trade, right? If I was just sticking to how I used to trade, targeting inversions at a 1-to-1 or a 1-to-5, I would have had a great trading day today, right? We inversed that 5-minute after open and everybody hit TP. It was a great day. Me, on the other hand, I was just being foolish. I haven't had many red days for a while. I've been on kind of a streak. But this morning, I even talk about it in one of my other videos. about viewing time frames starting as a satellite and zooming down into microscopic view for entries. And I had done that, and I already had my initial um, analysis prepared. I was looking for my longs, all my entries, and I was so zoomed in onto a 30-second time frame that, please excuse my son in the background crying. I was so zoomed in to the 30-second time frame that I wasn't essentially aware. I was so zoomed in, I got distracted by my children. Please bear with me. Why my wife's out there. He's not just screaming, locked outside the room. She was just in the bathroom. Please excuse us. We have 3 kids and 1 on the way. But today, when I was watching, you see price return back to the point of control, there's your TP. If you were targeting these highs, you'd still be sitting in your trade. Okay. Today, this morning, I was already anticipating these longs, hunting these longs. My analysis that I posted into the Discord group, you all can join as well. I do live trading multiple days a week, all free. In the Discord group, my analysis that I laid out in the morning time, I posted I was hunting for longs, extremely bullish price action. I included key levels where I anticipated the draw on liquidity to be, yada, yada, yada. And, we opened bearish, exactly what I want to see. And when you're in this 30-second time frame, you can very easily get lost staring at this is too far back in history to get the volume footprint data, but I was watching the order flow throughout here, and I had a first trade that I lost 0.5% on, right? Nothing major across 3 accounts, and I was like, oh, bummer, stinks. I'll risk 0.5% on 2 trades, and if I'm up, the trades are great that day, I might entertain additional third position if I have a lot of profit to wiggle with. That if I take a little loss, I still don't chew up my gains for the day. But this morning, I had taken a $125 loss on my live account. It's a 25K account on my first trade. And then I had taken 2 $250 losses on my 50K accounts. I have 2 other 50Ks. And so altogether, I was looking at being down roughly $600-700 and like that. And no big deal though. This is all, if you use proper risk management, really no big deal. You already factor all this in. But I was down, then I ended up, I really don't even know what I was thinking. Like I got so fog brain and stuck in this space hunting my longs. I had a couple confirmations, but they weren't great. I was essentially breaking my own rules, and I was stuck on the microscope, and I wasn't being as accurate and pinpoint as I normally am. And I took my first loss, said no big deal, and then I went back in. I had a win, came back to break even, and then I ended up taking another loss for trying to get into a long, and I gotten scared now. Essentially fear was in my head because I had already had 1 loss, and now anxiety levels are up, and psychology is such a huge part of this, as everyone will tell you, that I ended up closing the day 0.5% down. Really, not even actually. I think across the 3 accounts, I closed the day down $258. So I went down $40 in my live account, and the difference split between 250Ks. So really, no big deal at all. I'm not worried about it in the slightest. But I just completely stopped because I knew I was on the microscope. I wasn't following my own rules, my own normal strategy, and it happens. And so these are the things you need to remember if you're going to start bringing order flow into SMC trading habits. I like to form my analysis using SMC concepts, keep it simple. All right. And then when it comes to entries and confirming my analysis, I like to pay attention to order flow. I want to see a CVD divergence. If it's paired with an SMT, that's even better. But you will notice that CVD divergences tend to get respected more than an SMT divergence would. I find that they hold true a lot better, a lot more, should I say. Sorry, I keep saying, but I, again, I form my analysis using SMC concepts, and then I want to see a CVD divergence paired with or an SMT divergence paired with a delta divergence, like I was saying earlier on that volume footprint chart. I want to see say I'm hunting longs, right? I want to see this. I want to see that exhausted bearish candle that has a green delta. And that means that the shorts have become exhausted and the longs are taking over. If I wasn't making this video, I probably would have taken this. This was a beautiful trade, but that's all right. I should have. In one of the next videos, I'm getting better at this as we go, so multitasking will become easier for me. But so I would see this. I don't have an obvious CVD divergence, but we mitigated this gap. I was already anticipating this to be respected, so I most likely still would have taken it even without my CVD. I would have just seen this massive influx of bullish limit orders and market orders here, right? So we have completely flipped. We have absorbed this candle here. Now, if you also notice, why is it being funky? Each candle on the volume footprint also gives you, it's just because the range is so huge. I mean, each one of these candles were like rocket ships. 250 point range in the Asian session tonight. So where we have this point of control all the way up here, meaning the most shares are traded here. You see bulls have stepped in, bears are still present. Point of control's up here. We closed below the point of control. Shorts are still totally running the game, right? If we had closed above this with bear bullish price action, we have absorbed longs right here. It's hard to tell, but there's a small block of blue highlighted 5 levels of imbalance that were extended out. But we closed with a green delta. So longs are entertaining this, and they're buying it at the top of the candle, saying that that's a discount. We close below the point of control. We have a green delta divergence on a bearish candle. So that's my first indicator that we are going to flip. All right. Now this next candle here, point of control here. Look at the lack of sellers in this candle, right? All of this bullish price action stepping in at all these levels. Each one of these levels is essentially a quarter, a tick, 25 cents. So now look, this is massive imbalance, huge lack of bearish traders stepping in at these levels. All bullish orders being filled. So my entry would be, I want to see this candle close, and the next candle open, respecting these levels of imbalance. So we've had our delta flip, black candle, green delta, boom, beautiful, massive imbalances. We are, on a 30-second chart, it looks as though we've inversed this 4-hour fair value gap. But you need to keep in mind that that 4-hour candle is not closing when these 30-second candles close. So when we're diving right back up into this 4-hour fair value gap, on the 4-hour time frame, we're just still respecting it. We just mitigated it, wicked lower, it swept liquidity. I would look at the DOM. See, right now, we are probably consolidating with these low levels. If we dive back down to here, we got large orders and we got some pretty equally spread bearish price action. But I would see this candle close, this candle open, dive down here. If we were hanging around here even for a second, that's my entry. If we're not red delta digging back in, I don't think it's a fake out. If the delta flips and there's obvious shorts entering the space and we get a big aggressor bubble, black bearish aggressor bubble shows up and the candle's really digging in, then I'm gonna sit around on my hands and wait. But if we maintain a green delta, more buyers than sellers, with this strong of this is an auction, this strong of an auction, point of control in the middle, I would be long somewhere in here, content, right? So you could enter, boom. Where does your stop go? You could go below this buy pad, or you could go below this buy pad. In this case, until we formed more levels of imbalance, my stop most likely would have been below this buy pad, because price likes to return to the point of control, right? Even in candles, point of control, point of control. This candle rips back up to this one. Price is always trying to balance itself. This point of control, all of them. So just imagine that right here, we left point of control. Price dug back down, but it's so bullish that we didn't make it all the way back down to this level of imbalance. So I would have taken my entry there. Targeting session POC, session point of control. All right. Now take a look at that R. You can go in with such a much less size position. That's a 4.4 R. 30-point stop loss. And you're immediately trailing it too. Remember this, right? And you would have captured the whole thing. This is how my mentality would have been in this position. All right. I would have hopped in right around here. Say I even got in a touch late. Say it got in here and I got filled up there. No big deal. Still 3.6. Say I got filled at the top of the candle. 2.71. Great. Fantastic R. So as this candle, now this next one opens and rips and leaves these levels of imbalance, I am now stop loss in the green. Okay, so from that, ignore this shaded area. We're going to imagine this is my stop loss now. Make this purple so it's nice and visible. I got in at the top of that candle right there. This is now my stop loss. I would have trailed immediately after this candle closed. I'm boom, moving my stop loss into profit. Okay. Next candle, boom, stop loss is below this, what I call a buy pad. And a lot of other traders call a buy pad. It's a pad of imbalances. Our TP's up here. And I would have, boom, up to this buy pad, up to that buy pad. And at this point, when you're so close, I probably would have just hung out and let it ride. I might have moved it to the point of control on this candle. Either one, I would have hit full TP. So I did want to give one more video of essentially how this trading strategy is executed and my thought process behind it. People look at these charts and think it's complete mumbo jumbo, and it is to a lot. As as you stare at these over and over and over again and you dissect every piece of it, it becomes very clear. It looks crazy, but I'm not staring at every little detail. Each one of these tools is used at different times. So I have my onion essentially with all of its layers on the screen, and I need a certain layer to form my higher time frame analysis. I need a different layer, my volume footprint charts down here. That's all for my entries. Volume footprint candles for my entries and trailing stops. Um, so you really don't even need the volume footprint until you are anticipating an entry. We could have sat on our hands, watched price dig down to here. Once we see that price has entered this bullish fair value gap, boom, flip over to the volume footprint, zoom in on a lower time frame. It could be on a 5-minute chart while you wait for this move to happen. That is one heck of a dig. We will spend the rest of Asia going sideways, if I had to guess. So, we are respecting this bearish 5-minute fair value gap. I don't think it will, excuse me, continue to be respected. I think we'll most likely disrespect it, but it will be choppy on the way. I mean, we are in a funky period of time right now where we have some, war news coming out every 5 minutes. If you use Financial Juice for your news sources, you'll see that like literally every 10 minutes there's war news popping up on the screen with red headlines. So it's a very, very unique time. Things are flip-flopping all over the place. 1 second, we're bullish, and then we have a very short bear run, and people are getting stopped out like crazy and liquidated. So definitely trade safely. Given that I had my small loss earlier and I wasn't digesting the market correctly, I'm just stepping away from the charts for pretty much this 24-hour period. I will be live trading in the Discord tomorrow morning. If anybody would like to join, scan that QR code above my head and definitely join up. There's a tools of the trade section in there. I'm actively in there all the time. It's a small community right now. It's only about 20 people in there. I'm looking to really help some people out. I see a lot of other Discords are charging people a lot of money, and I believe that's because they aren't profitable traders. Most likely they are charging people a lot of money as to substitute the fact that they're not profitable and they need to make an income off the Discord. I give so much education for free. The community is super small. You can hop in there and ask me anything. I won't hold anything back from you right now. I do have an option to subscribe for $30 a month. You do not need to do that right now, but in the future, as this continues to grow, there's more people who want my attention. I basically will ask $1 a day from you to educate you on my trading execution strategy and model and follow my trades. I think that is incredibly fair. That's the cheapest Discord I've ever heard of. Most people are asking $150 at a minimum. That's considered cheap. I really have a hard time doing it for anything less than $1 a day. So I think it's super fair. Some streaming services cost more than that. So either way, I'm going to be getting off. I won't be trading this session, but that is some live tape reading of the Asian session, and I hope you guys like and subscribe. And please join the Discord if you're interested in learning more. Comment any questions or any suggested topics of discussion down below, and I will definitely get back to you, or I will do my best to incorporate it into a video. Thank you guys very much. Enjoy your night.